Hello everybody, my name is Rituja. Today we are sitting with Mr. Vikas Agrawal, who is the founder and CEO of ALTPORT Experts and a leading voice in alternative investments and private equity. So thank you so much for joining us today, sir. So to start, we just want to know about a brief story about you and how you can enter in AIF and PMS industry.
Okay, all right. So first of all, thank you, Rituja. You're doing a fantastic job. If you can educate somebody and help them create long-term wealth, I think this is the biggest thing that you can do in your life. So many congratulations.
Thank you so much.
And thank you for organizing this session.
Yes.
So see, as far as my journey is concerned, so I started this company ALTPORT in 2020.
Okay.
So when I laid down the foundation of this organization, one thing which was there in my mind is that how do I solve the bigger problem of many investors in India? Because that point of time, of course, now the awareness has gone up, but awareness level of alternates, which is AIF, where the minimum ticket size is 1 crore as per SEBI rule, and PMS, Portfolio Management Services. Overall awareness amongst the investor community for these products were very low. Number one. Number two, these products used to get some companies used to missell these products to investors. So there were a lot of missellings which used to take place.
Yeah.
And third is there was no transparency or a platform where, for example, there were some good quality portfolio managers.
Okay.
And they were not in Mumbai. They were perhaps maybe somebody is in Pune or maybe Chennai, Bangalore. But then they were not getting the deserving allocations. And one of the reasons is that because this HNI's distribution, the distribution network of large wealth management companies was so determined and so choosy that if they decide that they don't want to work with a particular fund manager, even if they are deserving fund manager, they never used to get the allocation.
Yeah.
So, and that's only because maybe they are not tied up with large distribution networks in India.
Yes.
So we thought this is a much bigger problem in alternates, and we wanted to create our own niche because we were very focused that we would do only one thing and we would do it 10,000 times, 1 lakh times instead of doing 10,000 things at one time. So we thought we'll create a platform.
Okay.
So there are 4 P's that I worked on. First P is platform. So during the COVID, I got enough time to build the platform.
Yeah.
And then I've kind of onboarded more than 1,500 portfolio managers on our platform. Both put together, AIF PMS, and that too during COVID time, 2020.
It's very difficult and hard time for you.
Right, absolutely. Then the second P was, products. So differentiated products for HNIs. Now, HNI investors, of course, would invest in mutual fund. Because mutual fund to sahi aapko bhi pata hai.
Right.
But then there are investors who are looking at beyond mutual funds.
Yeah.
There are investors who are looking at investing in countries like Taiwan or South Korea, Switzerland, Vietnam. I mean, these pockets are really growing well. But they don't have an access to these kind of alternative investment funds.
Yeah.
So I thought we'll build a differentiated product strategy where we've got about 1,600 AIFs on our platform as I speak to you.
Yeah.
Close to 1,250 PMSs and close to 550 gift city funds and about 15 SIFs, specialized investment funds, and about close to 15 international funds through international fund managers. Now all that is there in one pocket now, one platform with the differentiated products. Then the third P is that process. So I thought we'll build a process around it, that around the whole ecosystem, that there has to be a process. If you have a right input and you are an engineer yourself, and you'll have to tell me if this is correct, that if you have a right input and a right process, then the outcome becomes immense.
Yeah.
Correct. But if the input or a process quality is not so strong, then there are probability that the outcome may not be as good as it's supposed to be. Is that correct?
Yes.
This is how CPO works?
Yeah.
In any computer that you see?
Yes.
So what we thought is we'll build a process, investment process, where we put a lot of, and I call it acid test, a lot of difficult questions and a lot of difficult parameters to examine the good quality portfolio managers.
Okay.
So out of 1600s, we probably work with only 10 to 12 now.
Okay.
So imagine how exhaustive the list would be and how difficult the parameters would be. You know, on the PMS side, we work with only 5 or 6.
Okay.
SIF is only 2 or 3.
Yeah.
International is hardly 7 or 8. And GIFT City would be 7 to 8. So both put together, we only work with 30-35 portfolio managers out of a list of 1500 plus.
Yeah.
So that was the P. So that's a third P process. And fourth is people, of course.
Yeah.
So we're hiring people. We have office in Delhi, Bombay now, Pune, Nashik, setting up Bangalore. So idea is that these people would now go talk to their investors, understand their problem, and create an unconventional way of creating wealth. This is create a portfolio which is absolutely unconventional.
Yeah.
And not the traditional way of investing, which only has a government security or a bond or a GSEC or perhaps mutual funds.
Yeah.
I think investors are now looking at beyond that. Yeah. And that is the reason we have built this platform.
Yeah. First of all, really thank you so much. It's really a vast journey.
Yeah.
I'm really saying to this Vikasji, and it's really hard because he built the platform in a COVID time, which is really hard time. Like market is drastically volatile on that time.
Right.
So how you can took that decision on that time? But nobody, like not even a single thought coming in your mind like it is a COVID and how I can take such kind of risk in this situation.
Right. No, I think even I don't know if you ask me. So I come from Agrawal family, Vikas Agrawal. Yeah. So, business is in my DNA, my blood.
Yeah, that's true.
So maybe during COVID, I thought it's a good time to think through what I want to do. So I remember 23rd of, I think, March, our Honorable Prime Minister declared that there will be a lockdown.
Yeah.
But I did not had an idea that point of time that the lockdown would be like for more than 1 year or so. Yeah. I never thought. I thought it will be for a month or two. And I took the call of resigning, and it was very difficult to sort of convince Mr. Ramdev Agrawal because I used to work very closely with Motilal ji and Ramdev ji at Motilal Oswal. I spent about almost a decade to tell them that I am starting. He said, if you are joining somewhere else, then I'm not going to leave you. But if you are starting something on your own, because I always had this point, but I was in mindset, but I was not getting a big problem.
Okay.
So we thought this is the biggest problem because I myself and my elder brother, we've been investing in PMSs, through PMSs in equity since 2011 times. And we made one of the major mistakes. Okay. At one point of time, we felt that growth investing only works in India.
Okay.
And that was like period from 2012 to 2016. And we saw that from 2017 onwards, suddenly the value style started working out. Yeah. And then we failed miserably. So I said, we'll have to build some kind of framework and we'll build it for ourselves and we'll do the same thing for our investors. And that's how ALTPORT originated. Earlier, we were known as AIF and PMS experts India. So we continue to be experts in AIF and PMS. However, a brand name is called ALTPORT. So Alt is your alternates and Port is your portfolio management.
Okay, that's really nice story. So my question is to you, Vikasji, what is actually AIF and what is actually PMS? There's ticket size and all. And if someone want to invest it, so how you can suggest them a good product about AIF and PMS, because as you said, there are multiple products or 1500 plus products. So how you can choose that one product and you can recommend to the investor. Okay. What is your strategy about to selling the AIF and PMS products to the investor?
Sure. No, thank you for asking this question. It's a very important question. Even in fact, a lot of investors keep asking me this question. See, one of the things that we try to examine very, very carefully in the light of cool period is that whether there is a need for AIF product in client's portfolio or not.
Okay.
I mean, because the minimum ticket size in AIF is 1 crore and PMS is 50 lakhs.
50 lakh, yeah.
Now, when you look at in India, you would hardly have maybe 4 or 5 lakh portfolios in India.
Yes.
Whose portfolio size is more than 1 crore or more than 1.5 crores.
Right.
Now, these investors are well-read investors. They understand the dynamics. Now, they have there has been a lot of value migration from mutual fund to AIF and PMS of late. So question is, when the ticket size is 1 crore, how do you invest? So for example, you are the investor.
Yeah.
So what I would speak to you and try and understand is, I would try to look at your portfolio and try to do a complete end-to-end analysis. And after doing the analysis, we'll understand if your portfolio is already outperforming the benchmark significantly, then there is no need to add additional AIF managers in your portfolio. You may continue with mutual fund investment. Mutual fund to sahi hai.
Yes.
But if your portfolio size is going beyond 6, 7 crores, 10 crores, that is a time we'll have to revisit our thoughts and see to it that we go to an extent of 70% of the portfolio through unconventional way of investing, which is alternates.
Okay.
So which is AIF and PMS. So if you want to invest in AIF, I would try and understand that if you have invested in equities, then what is your total exposure in equity? Within that, what is the total exposure in large cap, mid cap, and small cap? And depending upon wherever you are underweight, I will probably add an AIF which is overweight in that particular segment.
Okay.
That's one way of looking. Second is, I would look at what is your total weight in real estate as an asset class.
Okay.
If you are someone living on rental flat, do not have any plan to buy your own house, but you want to accumulate maximum amount of wealth, and then with that money you want to buy, then perhaps I would add an AIF which essentially invests in real estate also. And by the way, there are few AIFs which exist in India, and they buy a piece of land and in bulk and sell it out to the builders community and make about 22-23% kind of returns at an IRR level. So probably I'll put your money in real estate. Or if you are someone, if suppose you want to put your money on behalf of your father, and let's say his age is above 60, for example. Now beyond 60, you don't need equity because that is very volatile asset.
Yes.
Then perhaps I will be adding a private credit fund. Maybe a private credit fund which can give you cash flow on a monthly basis, like 1% you get on a monthly basis cash flow, and you get about 2-3% extra additional appreciation at the end of 5 years. So then when you are retired, your dependency on this money is much higher. So you can't afford to take risk.
Yes.
So you understood how do we evaluate. So actually answer is with you and not with us. So our job is to examine that very carefully as a wealth manager. That's number one. Now as far as PMS is concerned, we see to it that in PMS we do a lot of due diligence before we onboard any manager.
Okay.
I remember one of the managers, he was doing very well. When I went and visited his office, I saw that he was the only man working.
Okay.
So I said, where is your investment team? So he said, there is no investment team. So I said, what if tomorrow something happens to you? So it becomes a key man risk now.
Definitely.
So the fund was performing well, people are putting a lot of money there, but then it's a no-no for me because that's a key man risk. So I would not advise the same to my investors, despite extraordinary performance.
Yes,
so I said no, because I need a proper fund management team. So these are few things I'm just telling you. There are some managers who come on CNBC and say something else, and when you look at their portfolio, you would see that they have invested in Yes Bank of the world. Now, I'm talking about 2017-18. So we'll go back and see whether the fund manager invested in that company or not, knowing the fact that their balance sheets were manipulated. It is a fund manager's job and duty to ensure that he would do complete end-to-end forensics research before investing in that company. So these are ways of understanding the mindset of the fund manager. And once we get comfortable that yes, it's a stable fund, then that is the time we start allocating money to the fund manager.
Yeah, that's really great mindset you have. My next question is to you that like if I'm client, or suppose like there are so many clients who have a different mindset. Some of the clients have a very aggressive mindset. Some of them have like they are very calmly. They have know about the market. But those who don't about the market condition because it's more volatile when there is a war begins and all. We have all seen that. So how you can handle that client who become more aggressively when they see their portfolio keeps down and down?
Right. No, so this is my job, if you ask me as a wealth manager. What you're saying is right. At times, I remember 2024, in the month of March, I advised one of our client to that. I informed him that we are taking a cash call in the portfolio of 30%. He said, "Fine, that's your decision." And then in the month of April, May, June, we saw that the markets were going up, but the portfolio was underperforming. So one day he called me and he questioned me that, "Would you like to revisit your thoughts?" I said, "No." But then he said, "No." Next day he called me and said, "This is my money and I'm telling you to deploy in equity." I said, "This is your money and I would follow your advice, but I would still suggest you that you should be on cash." He said, "No." And from 2024 onwards, market started falling and got corrected from peak level of 26,000 Nifty. It is now, Nifty is trading at 23,000 levels. It has never gone back to 26,000 level. So the portfolio is down about 15-20% now as I speak to you. So now that he is saying that, I wish I would have opted for cash call.
Definitely.
So what we do is, during the good times, we prepare ourselves for bad times.
Sure.
And during the bad times, we prepare ourselves for good times.
Yes.
Now, what do you mean by that? Which means, whenever we see that markets are getting into an expensive zone, and there are three zones. You have expensive zone, you have neutral zone, and you have a sort of attractive zone. So whenever we see that markets are getting into an extraordinary valuations and it is not sustainable, we start booking profits and start coming out of the markets. And whenever we see like this kind of situation, for example, today, because of war between America and Iran, markets are underperforming, Indian markets. So this is the time we are buying more equities, accumulating more equities. So that's on the performance side. But you're coming back to your question, you said that how do you manage the investment behavior? So our job is basically to manage the investment behavior, investors' behavior. So before constructing the portfolio, we call it our basically investment policy paper, where we define the investment framework. That look, what is the need? Suppose I am doing it for your father, and let's say he has a plan to send you abroad for your masters in engineering. Now, obviously, when you go Australia or anywhere, you will be needing at least 20-25 lakh rupees. That planning has to be done well in advance. That we will not wait for markets to correct and give me additional money to fund your education. We will start redeeming the money much earlier than before you plan to go abroad. So that needs to be planned well and needs to be monitored well. Now there are 2-3 things happen. One, all these mistakes happens, investor get panic when they are not handhold properly by their wealth managers. Now if I go to your father and give him the complete rationale that look, this is the reason we should be not redeeming the funds, we should be adding the funds. Because what happens is, when you go back and turn on your TV, you see all the negative news coming to you all the time. And then you get panic about what will happen to my investments. Now this war will continue, the dollar, the Brent will go up, crude, there will be lockdown, and again we'll get into problems, etc., etc. And your mind also starts thinking negatively. And that is the reason you call. That is the time you call your wealth manager and tell him to redeem all the funds. We do the reverse. We reach out to client.
That's really nice.
And handhold them with proper data points. We show the history. Now, history suggests that whenever there was a war and when the war gets over, immediately you see markets bouncing back to the tune of 20-25%. This is not the first oil crisis, this is the third oil crisis. Of course, this is much bigger. But even in the past, when we had no money, I remember our Honorable Prime Minister had to pledge our gold because there was an oil crisis in 1990s. But then we never, so when we look at these data points, we suggest and share all these. So when you share the data points, so they get convinced that no, this is not the time to sell, it is a time to rather buy. And then I take more money from your father and put there. So that's how I would like to manage the...
That's really nice and fascinating strategy. When market collapse, I think you have to reach out to Mr. Vikas Agrawal for that. And my next question is to you, Vikasji. it's very hard to someone to build a first CR for their life.
Yeah.
So how you, and my second question is also, at what age you made your first CR, and
Right.
how you can suggest to the youngsters and to the people who are really do daily struggles and all, but they are thinking like, no, it's very hard to build a one CR.
Right, right.
So can you just elaborate for
So
your
first of
thoughts
all,
on
बहुत आपको मैं धन्यवाद दे रहा हूँ. आपने बहुत you asked me very beautiful question.
that? Okay.
I know you are Gen Z, so obviously you are also curious to know one.
about it.
So I made my first crore when
Yeah.
I was at about 33.
Oh.
My first crore. I know how difficult it is to make your first crore.
First crore.
But once you make your first crore,
Hmm.
then journey becomes very easy.
Yeah.
Now India took 75 years to become $1 trillion economy post Independence Day.
Oh.
And in 2007 we became $1 trillion economy. Same way.
Hmm.
See, you are someone who just started the career 2 years back, 3 years back, right? Now, obviously, as you become more experienced, your salary would go up.
Yeah.
So कहते हैं ना बूंद बूंद से घड़ा भरे.
बढ़ेगा.
मतलब ये है कि if you do SIP, systematic investment plan in mutual funds, and let's say you may start with 500,000 rupees, whatever you do, but follow the formula of Warren Buffett. You know Warren Buffett is one of the richest investors.
investor.
He says that first you earn, then you save, and then spend.
Spend.
Now what Gen Zs are doing is just opposite to.
They do it reverse.
Yeah, so they do it reverse. Right? That's right. So they earn, then they spend. Like they would buy your iPhone.
Yeah.
I don't have an iPhone. Can you believe at this age, I'm managing about almost 950 odd crores of asset under management. I don't have iPhone. So he would do first, but my son has iPhone.
Yeah.
You know, so
Okay.
they would go and buy iPhone, and then whatever little left out, they would try to save. Otherwise, postpone.
Yeah.
Now, my submission to all of you, all the young generations, first of all, they are very intelligent. They are really doing very well, and this generation will take us to the next level. Be it artificial intelligence
Yeah.
or be it anything else. Obviously they would do better. So my submission to them is that certain rules are maybe traditionals but should be followed.
Yeah.
So first you earn, then save. The other thing is, my guru told me that in your journey you have to first learn,
Yeah.
and this is your learning time. Then earn,
Yeah.
increase your salary, etc. And then there will be time in your career when you will start returning the money. So learn, earn, and then return. So coming back to your question, if you want to make 1 crore, start the systematic investment plan.
Yes.
If you suppose, and you can look at the various calculations. There was a scheme by SBI called SBI Contra Fund at that point of time.
Okay.
I had my SIP there. I think it was about 2000 or something. Within 8 years, that itself became 50 lakhs in my portfolio. Because that point of time, markets were on bull run between 2002 to 2008. And my SIP amounts were also going up every year because of my increment in salary.
Okay.
Both put together became 50% of my portfolio at one point of time. I'm talking about 1 crore, the composition. So initially getting 1 crore is a little difficult, but once you reach there, then multiplication take place.
Yes.
For example, if your portfolio is growing at 25-26% year on year,
Okay.
26% to be very specific, your 1 crore, let's say you make your first crore at the age of 32 or 33. I am assuming that because I also made the same time.
Yeah.
I am assuming that you will do better. So you will make your first crore at the age of 30. So if it is growing at 26%, 1 crore becomes 10 crores at the age of 40.
Yeah.
Then 10 crore become 100 crores at the age of 50, and 100 become 1000 crores when you get retired at 60.
Okay. So it's power of compounding, you can say that.
Yes.
Yeah.
That's what you've learned in your engineering, right?
Yes.
Mathematically. So this is the simple math. If you can save as much as possible and build a portfolio of 1 crore by 30, then you are home. then you don't have to do anything.
Definitely. It's really a great idea, guys, and definitely Gen Z should follow this idea also. And my question is to you, Vikasji, as you said that there is a power of compounding is very great.
Yeah.
But what people or what investor do, like if they see there is a 10-20% or profit and all, they have no idea about it, what power of compounding do in their portfolio. So they just redeem it. They don't have patience. They just think about that, no, maybe market get fluctuated and this money also I will lost about it.
I know.
So how you can tell to that people that how they can control over their nerves, or what you can say that how they can get a patience, because patience is very important when you are entering into stock market. So how you can say to those customers?
There are two ways of dealing with this problem. One way is that you study more.
Yes.
When you are investing, you need to be updated about what's happening in economy. Start tracking the numbers like GDP number, CPI number, manufacturing PMI numbers, the overall capex numbers, etc. Or you work with wealth managers. You know, like for example, we have a team now. So the wealth management, because their full-time job is to do complete research, they would handhold the investors, as I said. And when you get handholded by somebody, then you will not just go and redeem.
Right.
You redeem only when you have no idea what the future is. But if you have someone who is educating you, giving you a data number, showcasing the trend, then obviously you're not going to sell. So therefore, working with wealth managers are very important. कहते हैं ना कि एक सारथी जरूरी होता है.
Yes.
So अगर आपको एक अच्छा सारथी मिल गया लाइफ में, तो आपका वेल्थ अच्छा क्रिएट हो जाएगा.
राइट. सो जैसे आपने बोला कि लोगों को आइडिया नहीं रहता है इन्वेस्टमेंट के बारे में, दे हैव टू नो अबाउट दिस. सो कैन यू जस्ट सजेस्ट दैट, एज आई हैव आल्सो हर्ड अबाउट यू आर अ वेरी गुड रीडर, यू ऑलवेज रीडिंग बुक्स, मल्टीपल बुक्स, एंड यू ऑलवेज सजेस्ट कि you have to read a book. Good reader have definitely, you have to read a book, as I've said. So can you just suggest to the investor who are really interested in the market and who have no idea about power of compounding, which books you have to prefer to those?
Okay. Even today I read about 7 to 8 hours a day.
Okay.
So reading is must these days. So I never say that that you should read the book always, but it depends on people to people. But what I read is, if I have to know more about compounding, there is a book called Joy of Compounding.
Okay.
It's authored by my friend Gautam Baig.
That's really
so
great.
He's based out of US. He's the fund manager. He's also on our board of Complete Circle as an advisor to the PMS for Gurmeet Chadda and Chitrit Mahajan. It's a company called Complete Circle PMS. So that book is really good, because power of compounding everybody knows.
Yes.
It is called eighth wonder of the world. Everybody knows, but nobody understands it to the extent it is required to understand. And therefore, I would suggest everybody to read this book called Joy of Compounding. But somebody really wants to get into investment, there are many books. For example, there's this book called Poor Charlie's Almanac. Now, this book is basically a Gita of investments, where a lot of wisdoms have been discussed by Charlie Munger and explained in detail for investors. So if somebody wants to start, maybe they can start from there. And then you have a lot of like intelligent investor, focus investing, and there are many books, science of investing, many books on investing. So one can start from anywhere.
Yeah, that's really great. Right. We have to start to reading a book.
Yes.
If you want to build the first year of your life.
Absolutely.
Definitely. So my question is to you, Vikasji. Like you say that you have lots of experience, like more than 20 years of experience. So what about your RMs, like relationship manager experience? Because they have also coordinated with the client also. So client also asking the same thing. Because definitely if you have more experience in the market, people attracted towards you more. So may I know about the experiences your RM had?
Right. So, in our organization, because we are boutique in nature, we do not have any junior managers at this point of time.
Okay.
So, any average experience that you look at amongst our relationship management team is about 20 years minimum. We put the criteria that we have to have. in 20 years they learn a lot in terms of investing and become more disciplined. Now all of them are first of all NISM qualified. There is a exam, separate exam for PMS, portfolio management, which everybody needs to clear before they off. So first of all, they are all.
Yeah, definitely.
So we see to it that we hire a very high quality relationship managers, and they don't have to get involved themselves in terms of selecting the AIF and PMS strategy. That is done at the central level in our organization in Bombay. Their job is to, once they get the list of these companies, they understand, talk to their investors, understand the need, and basis that get their portfolio prepared. But all the strategies are prepared at the central level. That's number one. And number two, they are the one who actually take the help of investment counselor also. So we have investment counselor and research team working together along with relationship manager, who help the client to prepare the portfolio.
Okay, that's really great. My last question is to you for the today is like, what you see the AIF and PMS future in India? What you see that how much it will growth in India? Like more of the countries and all, they already know about the markets and all, but people in our India, they have lack of knowledge about the markets. So how you can share your experience about it? What your thoughts about it?
See, I can be a little biased, Rituja, here, because I do AIF and PMS throughout the day, you know. So I eat AIF PMS, I sleep with AIF PMS, so I can, my views can be biased, but see, this industry got regulated and organized in front of my eyes in 2013. As I speak to you, it has completed 13 years now. And in the 13 years, the size of the industry is now 15 odd lakh crores. So you see how it has gone and grown up to that extent. The PMS, non-promoter, non-institutional, is about 5 lakh crores now in India. So both put together is about 20 lakh crores. That's a sizable money vis-a-vis mutual fund asset, which is about 75 to 80 lakh crores. That's already about 25% of mutual fund industry. 10 years down the line, my sense is that AIF PMS will be equivalent to mutual fund industry in terms of the size. Because one, you are attracting new investors, those who are HNIs, and as the savings of Indian economy, as the savings of individuals are going up year on year, you will eventually see that many people are participating in equity markets or capital markets through AIFs and PMSs. And on top of that, I see a lot of NRIs coming from abroad, investing in through Gift City. There was a time it was very difficult for them to invest in Indian markets because there were a lot of documentation problems. But all that has gone away, and slowly it is building up. So my sense is that it will be 75 lakh crores 10 years down the line.
That's really a great market size you have said. Means AUM is growing day by day or month by month or year by year in AIF and PMS industry. So today is very fascinating podcast we have shoot with Mr. Vikas Agrawal, who is a really experienced industry expert. And I'm really thankful to you, Vikas ji, for being here today, and definitely seeing you soon for the next podcast.